Hey everyone! In today's video, we're diving into earnings per share, a key financial metric used to assess a company's profitability. Earnings per share represents the portion of a company's profit allocated to each outstanding share of common stock. Let's look at an example. We have here the net income our company had during the period, which is 500,000 euros. We also have the preferred dividends paid out, which amount to 20,000 euros. Average outstanding shares represent the average number of shares owned by shareholders during the period. Formula looks like this. Subtract net income from preferred dividends, then divides that result by the average outstanding shares to calculate the earnings per share. Excel will return 4.80 euros. This indicates that for each share, the company earned 4.80 euros after paying preferred dividends. A higher earnings per share often indicates that a company is more profitable and potentially a better investment. Earnings per share growth over time can indicate positive company performance and is often a factor in stock price movements. And that's all for today's video. If you found this video helpful, please give it a thumbs up, subscribe to the channel.